Thanks for tuning in. We're going to be taking a look at Mastercard and two different trade ideas I have on Mastercard. This is going to be a nice, sweet, quick video. If you guys are wondering how you guys can get a ticker request, we have a paid service here at Alpha Action that's called Alpha Action's Pre-Market Wrap. And in that paid service, every day pre-market, I come out, I tell you guys my expectations for the broad market and what I'm expecting going forward. I give you guys options trade alerts, so trade alerts that are on options trades, longer term swing trades usually lasting a week to 2 weeks on options, and giving you guys trade alerts for that. Answering all of your questions, so inside the pre-market wrap in the comments section, you guys can ask as many questions as you want, and we answer all those questions. And then the last thing that we do is that we take ticker requests from all of you. So if you guys have any stocks or any currencies, bonds, commodities, crypto, anything you guys want us to look at, we're going to take a look at that. Or if you have some sort of a trade structure, trade idea, we're going to take a look at that, and you can tell us whether it's a long-term investment, short-term trade, whatever it may be. So today we're going to be looking at Mastercard for what I'd consider both an intraday trade and a swing trade. So the first one is the intraday trade. And this intraday trade is a mean reversion trade. Mean reversion traders like to bet that a stock is going to go down after it's run up a lot, or bet that a stock is going to go up after it's come down a lot, right? They hope for a reversion to the average or reversion to the mean. And that's what we're going to be looking at. It's also oftentimes called a rubber band trade, because if a rubber band stretches a lot in one direction, usually snaps back in the other direction, right? So that's what we're looking at right here on Mastercard for a day trade. So looking right here at Mastercard is really overextended. Look at that RSI right here. Looking at the RSI, it is pretty much at what I can say an all-time high. I don't think on the daily chart, looking back, I have never seen a relative strength index this high. So it is at an all-time record high on the relative strength index. And what I like to look at even more than that is a Bollinger Band. And on that Bollinger Band, we have now popped above that 1 standard deviation realized volatility. And what you guys are going to notice is that if you guys go back, every time it pops above, like right here or right here, it tends to come back in. And that's how you can do a rubber band trade. After it pops up, you short it, and then it comes back in. So here's the day trade going forward. I'm going to zoom in right here. So if we see on Monday morning that Mastercard gaps up to about right there, so a small to medium-sized gap up. You don't need a big gap up, but if you get a gap up, you're going to see that there is a short opportunity. And so what you want for a rubber band trade is that you want it outside the Bollinger Bands, right? These bands right here, these green lines, that is a Bollinger Band on the upper side. Then you have one on the lower side. And in the middle, you have a 20-period simple moving average. So it's going to get into an overbought state based on 1 standard deviation of realized volatility if it gets above this band. It has on the daily. Then you want to check the 4-hour chart. And on the 4-hour chart, you also want to get above this green line. And if it is, then you want to check on the 2-hour chart. And then if it is above that green line on the 2-hour chart, then you want to check the 1-hour chart. And then finally, you want to check the 15-minute chart, and you want to check to see whether it is above that line right there. That means that it is really, really overbought and is set for that rubber band trade where it's going to snap back down. So it's going to be a short opportunity. How are you going to place your stop loss? You're going to look at the average true range, which measures it literally measures the average true range, right? Like the range of the stock, how much it moves up and down over the last 14 days. So an ATR 14 RMA is what is called on TradingView right here. It's about $1. On the 15-minute, and then you just multiply that by 2. And so you put on the trade, you put on a trailing stop loss right there, and then you either get stopped out for a very, very small loss, less than 1%, or you go ahead and it starts to come down, which is a higher probability bet right here. And whenever these things come down, they come down very quickly. They oftentimes will just flush lower, straight lower, because usually there are people adding onto shorts because the price is going higher, but there's no buyers this time. Usually there's buyers on the way up. The buyers just shut off. This is a buyer shut off type pattern, and then you go straight down. And at that point, you're in a guaranteed profit position because your stop loss has started to come down, and you either got stopped out at a profit, which is one of the things that can happen. Or another thing that can happen is that when you start to go onto the hourly chart and you start to see the relative strength index getting oversold, then you want to get out of the trade. So that's the day trade that we have on Mastercard. Let's go over the swing trade. So a longer term trade, swing trade is happening on Mastercard. And right here, let me zoom out and fix this chart up a bit. Okay, so what did we previously see on Mastercard? Big flush down, and then we've seen it come up and then just consolidation. It just spent a couple of weeks. In fact, I can go into the weekly chart. Just spent a couple of weeks essentially just doing nothing, just chopping sideways. And that's healthy. That is healthy. You never just want something going straight up. You want to go up and then take a bit of a breather. And so that's a healthy thing that happened right there, and now it is broken out. So what are we going to look for now? Well, now what I start to look for is I look for opportunities to start scaling in long. But right now it's really overbought on the RSI, on the Bollinger Bands, so I want the price to come lower before I start to scale in long. So what I do is I'd go right here and I would look for the fib retracement. And I go to some sort of a low right here, low of the move. And then I would simply look for a fib retracement. And I don't want to buy. Usually what you do is that you buy in every fib retracement. I don't want to buy in every fib retracement because it is overbought. So what I do is after 50% fib retracement down here, I'd place some limit orders down here, scale in, buy a little right here, buy a bit more right here, and buy a bit more right here. So I'd have 3 of those orders, buy a little more, buy a little more, and just keep on buying a little bit more 3 times, and scale in long into this uptrend. And this is more of a trend following trade rather than a mean reversion type trade. But that's what I'd be doing on Mastercard. And then where will you place your stop loss? Well, 2 times the average true range on the daily. And then what are the line in the sand levels when it comes to Mastercard? Well, Mastercard just chopped sideways. It really did not do much. But the line in the sand level right here to be looking at is about right here, I'd say. So that starts to become the line in the sand level. If it gets below that level, you don't want to be in a long position anymore. So place your stop loss just right below this, like about right here. Place your stop loss right there, buy a little bit right here, buy a little bit more right here, buy a little bit more right here. And hopefully the first scenario is that it comes down, fills probably 1 or 2 of yours, and then it doesn't fill the third one, and then it just continues higher. That's the best case scenario, really. What's the next scenario? It does an equilibrium pattern. This is a type of tightening range. So it comes down, hits support, goes up, and then just does this tightening range where it gets tighter and tighter and tighter and tighter. And so we can actually draw some trend lines for this. It's going to come down. It's going to get tighter and tighter on the downside. And then on the upside, it's also going to get tighter and tighter. And so this just means that there really won't be much movement. It's going to get tighter and tighter and tighter. In a triangle type formation, we call that an equilibrium. A tightening range is usually what it's referred to. And then it's either going to break big time bullish or break big time bearish. This is going to be the likely scenario if we come down a lot. And if we come down all the way really close to that support level at about right here. That's when this is likely, where we go from high, low, lower high, higher low, tightening range, and then we finally break. What do we do when we're inside that sort of situation? Well, we're going to dollar cost average in, buy a little right here, buy a little right here, buy a little right here. So you're likely going to be in a situation where you are up a little money on your stock eventually when it reaches right here. But before it reaches right here, when you start to see the stock price start to pop up, what you can start to do is you can sell some call options against it right here. And you can make money from it just churning sideways. So in 2 out of the 3 scenarios, we're making money. We make money if it flies up. If it just chops sideways, do some covered calls, we can make some money and place a really tight stop loss right here. This stop loss should be a static stop loss, meaning that it's not trailing. It just stays right there, static. And you don't move it up until after Visa gets above this level, after it comes down, fills those orders, and then it gets back above 366. And then finally, I would say you can move your stop up. So those are the 2 trade ideas on Mastercard I have. And if you guys are interested in sending us ticker requests like this, link in the description below, pinned in the comments section. You guys can get access for the next 2 weeks for free, and then it becomes $49 a month or $499 for the annual plan. Where again, you guys get access every day pre-market. I'll come out, I'll tell you guys what's happening pre-market, really going over market profile, volume profile, things that newbies in the markets usually don't know about. They just look at candlestick charts, which is fine, but volume profile can really get into the nitty-gritty of what happened and get into the probabilities and lay out probabilities for what's going to happen. Options, swing trade alerts, about 1 to 2 weeks in time frame. Answer all of your questions in the pre-market wrap right down there in the comments section, and then ticker requests like this that you guys can send tickers to me, and we'll look over those tickers and analyze them for you, and we can use for a specific situation. So if you're someone who's more of a longer term holder, if you want to say, you know, should I hold Intel for a very long period of time, or is it like a good value investment, then we can actually look at more of the fundamentals rather than the technicals on something like Intel if you wanted to hold on it for years and years and years. So we really do all of that. Again, link in the description below, pinned inside the comment section. You're going to come on to a page. It's going to be an about page that really just tells you about Alpha Action's pre-market wrap, and it's going to say subscribe in the upper right-hand corner of the web page. Thanks for watching, everybody. Stay safe, stay profitable, and happy trading.